quick, just to make sure everybody's in tune, if we start getting an increase in market activity, let's just take a look at the ES one more time. We're still sitting in the middle of Friday's range, so there's nothing we should really be jumping into here. So let's just real quick, I know some people come into the room just a tad after the open. Our first level of near-term support is built up by long holders, or those that were buying this market in the 1,070 up through the 1,071s, 1,072s in the after-hour session. This is lower volume than typical day volume, so it's there is some long accumulation that was building up in that area. So we'll pay attention to that. Primary levels, though, we get into Friday's levels of support that are actually built with real inventory. Then we're looking at the 1,068, 1,069s, and of course 1,066 area. Below that, we have 1,062, 1,063s that are built with real resting long inventory, and a very key area where we had our significant major inventory grab long trade set up. That is the 1,051s. Really, there's buying 1,051s all the way up through the 1,053s into that pretty dramatic short covering and newly initiated buying that came into the market right here. So that's our areas of near-term support. And remember, as I'm tracking cumulative delta, the only support and resistance I ever pay attention to in the market is areas that actually has somebody's butt on the line with some real inventory. I don't pay any attention to myself. I don't pay any attention to market profile, Fibonacci's, Elliott wave, pivot points. I only pay attention to areas where there's actually really some inventory being held by participants that are able to hold these levels of inventory. You start seeing areas that are holding 5, 6, 7, 8,000 contracts or greater. That's not a bunch of one-lot traders that decide to hold some positions for 5 days. These are areas built up of very significant commercial participants that can carry thousands of contracts day after day. So we get up into 1,086 up to the 1,088 area. We have multiple layers of resting short inventory, and again, the very key over-under area I'll be paying attention to in the middle of a multi-day range of price is 1,093 up through 1,096.75. As I pointed out before, that area has over 34,000 contracts of short inventory being held. That's and I have that indexed kind of in this orange color. That is a very prominent or very important quantity of inventory. When you start getting 10,000 contracts or greater held in a 3-point range of price, I always index those differently, and those are what I call delta zones of resting. In this case, it's resting short inventory, but it can be resting long or short inventory. We have multiple rotations of price that had very key turning points in the delta, where the order flow made very dramatic shifts from buyers having control back to sellers having control. And this is my new over-under area. Market starts trading above the 1,096.75 to the point that this uppermost index delta threshold level of inventory has been neutralized. Then that will tell me that equity side bulls are in control. They've had enough significant buying, full buy program activity to cause all the short inventory held in only a 3-point range of price to leave the market. And most likely, as that's happening, we're going to have a very dramatic short covering rally and momentum to carry the market up through this area. Then above that, we have a pretty wide gap before we have key areas, and then we get above that into some really heavy inventory levels of those holding short inventory as we approach the 11.15s up through the 11.18s. So the fact that we have a kind of a void where we don't have any key levels between that over-under and another area where we have multiple layered inventory creates some interesting resistance in itself, as equities might do enough to get the market to short cover this inventory, but to cause the ES to trade up higher with newly initiated buying following equities buy program activity. It's a heck of a long way in price to go before they could probably get these holders of short inventory off this level that are still remaining to be willing to unwind. So for now, the main area to focus on is 93.75s to 96.75s. That is the key over-under at this point in this market, taking into context the action of the last, we'll call it the last about 7 trading days. So the market currently here on a Monday morning, coming into the last part of May, just ahead of news, about 7 minutes to news, sitting with, again, still a large imbalance. If you look at the open interest overall standpoint of the ES, this market is still highly saturated with short inventory and is, as a result of Friday, starting to build some layers of long inventory support. Not a lot, but we do have a few that are now in place. So that covers the real support and resistance in the market, and real support and resistance in the market, in my opinion, are only areas where larger participants that are able to carry and trade with large amounts of liquidity and are able to hold those positions for many, many days, wherever they've accumulated inventory in the market, to me, are the only areas that I ever pay attention to for support and resistance.